Within air freight, Expeditors typically acts either as a freight consolidator or as an agent for the airline that carries the shipment. Whether acting as a consolidator or agent, we offer our customers routing expertise, familiarity with local business practices, knowledge of export and import documentation and procedures, the ability to arrange for ancillary services, and to assist with securing capacity during periods of high demand. As an air freight consolidator, Expeditors purchases cargo capacity from airlines on a volume basis and resells that space to our customers at lower rates than what those customers could negotiate directly from the airlines on an individual shipment. Expeditors determines the routing, consolidates shipments bound for a particular airport distribution point, and then selects the airline for transportation to the distribution point, where either we or one of our agents then arranges for the consolidated lot to be broken down into its component shipments and for the transportation of each individual shipment to its final destination. Within ocean services, Expeditors offers three basic services: ocean freight consolidation, direct ocean forwarding, and order management. As an ocean freight consolidator, contracts with ocean shipping carriers to obtain transportation for a fixed number of containers between various points during a specified time period at agreed upon rates. We handle both full container loads as well as less than container load, local freight, offering a wider range of shipping options and rates than available with the carriers directly. We also generate fees for ancillary services such as the preparation of documentation to comply with local export and import laws. Expeditors provides a range of order management services, including consolidation of cargo from many suppliers in a particular origin into the fewest possible number of containers, putting more product into larger and fewer containers in order to maximize space, minimize cost, and help our customers reduce their carbon footprint. Expeditors helps importers clear shipments through customs by preparing required documentation, calculating and paying duties and other taxes on behalf of the importer, arranging for any required inspections by governmental agencies, and import services such as arranging for local pickup, storage, and delivery at destinations. Such services can include screening commercial documentation for assessed value, country of origin, application of special trade programs, and classification. Our target market is primarily comprised of customers looking to reduce the number of customs brokers used, those looking to improve compliance and reporting, and those seeking opportunities to participate in special trade programs globally. Continuing to leverage our long and deeply entrenched presence in China, as well as the reputation that we have with the strategic carriers servicing China to build a stronger customs brokerage and in-country presence. Our main focus remains on developing and integrating our customs systems expertise and talent, and making investments that enhance and improve our import brokerage infrastructure and our ability to provide local delivery and support services in China. As in NIVOC, EO contracts with ocean shipping lines to obtain transportation for a fixed number of containers between various points during a specified time period at an agreed rate. EO provides full container load services to companies that need flexibility and access to vessel capacity that they may not necessarily achieve by dealing directly with the shipping lines. Additionally, EO supports customers that prefer to supplement their carrier strategy with NVOC. EO also leverages the Expeditors global gateway network for the movement of local freight for customers needing to ship smaller consignments via ocean. EO issues a house ocean bill of lading, HOL, or a house seaway bill to customers as the contract of carriage and receives a separate master ocean bill of lading, MOL, when freight is physically tendered. Revenues from fees charged to customers for ancillary services that EO may provide include the preparation of shipping and customs documentation, packing, crating, insurance services, and the preparation of documentation to comply with local export and import laws. We also charter vessels to support both our customers' special projects and our container capacity needs. When the customer contracts directly with the ocean carrier, EO acts as an agent of the customer and derives its revenues from commissions paid by the ocean carrier and handling fees paid by the customer. In such arrangements, EO does not issue a HOBL or house seaway bill. Rather, the carrier issues a MOBIL directly to the customer, who employs EO to create documentation, manage shipment information, and arrange various services to facilitate the shipment of goods. The mobile shows the customer as the shipper. Order management provides services that manage origin consolidation, supplier performance, carrier allocation, carrier performance, container management, document management, delivery management, and order/SKU visibility through our web-based portal. Customers have the ability to monitor and report against near real-time status of orders from the date of creation through final delivery. Item quantities, required ship dates, required delivery dates, commodity descriptions, estimated versus actual ex-factory dates, container utilization, document creation, and visibility are many of the managed functions that are visible and reportable via our web-based portal. Order management is available for various modes of transportation, including ocean, air, truck, and rail. Order management revenues are derived from services provided to the shipper, as well as management fees associated with managing order execution against customer-specific rules. One basic function of order management involves arranging cargo from many suppliers in a particular origin and consolidating these shipments into the fewest possible number of containers to maximize space utilization and minimize cost. Through origin consolidation, customers can reduce the number of containers shipped by putting more product in larger and fewer containers. The COVID-19 pandemic could also have the effect of heightening many of the other risks described below. Throughout 2021 and into 2022, transportation rates have risen to historically high levels. We believe that as COVID-19 disruptions recede and passenger air travel rebounds, that port congestion will improve. This will result in additional transportation capacity becoming available. Rates will likely decline as this occurs. On a limited basis, we have entered into fixed rate by agreements to secure space in the air and ocean markets. Future declines of sell rates will negatively affect our operating income and cash flows. COVID-19 places significant stress on our air, ocean, and freight ground carriers, as well as other service providers, which may continue to result in reduced carrier capacity or availability, pricing volatility, or more limited carrier transportation schedules and other services that we utilize, which could adversely impact our operations and financial results. In 2020 and 2021, air freight services experienced unprecedented events in response to the global pandemic. As a result of travel restrictions and lower passenger demand, airlines significantly reduced flight schedules, which limited available belly space for cargo at a time where global demand remained high. Demand started growing in the second quarter of 2020 and continued to remain high throughout 2021, amplified by a strong economy and customers converting to air shipments due to disruptions in ocean transportation, creating additional competition for limited available capacity. These conditions have caused extreme imbalances between carrier capacity and demand, principally on exports out of North Asia and South Asia. In order to execute and meet the transportation needs of our customers, we significantly increased utilization of chartered flights while still routinely purchasing capacity in advance and on the spot market. This resulted in sustained high average buy and sell rates. Freighters, charters, and gateway infrastructure are operating at near maximum capacity, which is continuing the pressure on buy rates and limiting the ability to move additional volume. Freight consolidation, direct ocean forwarding, and order management are the three basic services that constitute and are collectively referred to as ocean freight and ocean services. Ocean freight and ocean services revenues and expenses increased 137% and 149% respectively in 2021 as compared with 2020. The largest component of our ocean freight and ocean services revenue is derived from ocean freight consolidation, which represented 82% sign and 66% sign-off. Ocean freight and ocean services revenue in 2021 and 2020, respectively. Brokerage and other services revenues and expenses increased 42% and 51%, respectively, in 2021 as compared with 2020, primarily due to an increase in shipments from existing and new customers, an increase in demand for brokerage services, in part due to Brexit and import services. Revenues and expenses for import services increased significantly due to record high drayage, storage, delivery, demurrage, and detention costs incurred at destinations caused by port congestion, shortages in warehousing space, and delays in retrieving and delivering cargo. Road freight, warehousing, and distribution services revenues and expenses also increased as a result of growth in demand and higher trucking, storage, and labor costs. Slowdowns due to the pandemic-related closures affected volumes, particularly in aerospace, automotive, oil and energy, and certain portions of the retail sectors in 2020, creating a backlog in supply chains that resulted in higher demand for services in 2021. Customers continue to value our brokerage services due to changing tariffs and increasing complexity in the declaration process. Customers seek knowledgeable customs brokers with sophisticated computerized capabilities critical to an overall logistics management program that are necessary to rapidly respond to changes in the regulatory and security environment. Historically, our business has not been adversely affected by inflation. However, in 2021, many countries, including the United States, experienced higher inflation than in recent years. In 2021 and continuing into 2022, our business has experienced rising labor costs, significant service provider rate increases, higher rent and occupancy, and other expenses. Due to the high degree of competition in the marketplace, we may not be able to increase our prices to our customers to offset this inflationary pressure, which could lead to an erosion in our margins and operating income in the future. Conversely, raising our prices to keep pace with inflationary pressure may result in a decrease in customer demand. The company typically satisfies its performance obligations as services are rendered over time. A typical shipment would include services rendered at origin, such as pickup and delivery to port, freight services from origin to destination port, and destination services such as customs clearance and final delivery. The company measures the performance of its obligations as services are completed over the life of a shipment, including services at origin, freight, and destination.